start? Okay. So we are going to learn about basically Ind AS. Today we'll complete off Ind AS 16, Ind AS 40 and Ind AS 105. So this is the normal thinking. Now whenever you go for learning any Ind AS, just keep in mind the overall idea of that Ind AS, a bird eye view of any Ind AS. Like you can always find out that any accounting standards that is now our Ind AS will be divided somewhere in 6 parts. You will always find that the standard will talk with respect to objective. Why this standard was basically brought. What was the purpose of this standard? Objective. Then but obvious, it will talk about the scope. Either the scope will be given in a positive way or it will be given in a negative way. The Ind AS will say that it applies to this areas or it does not apply to this areas. See, scope is very much required, very much important. Otherwise there will be no limit. Like if I talk about inventories, so where should it be applied? So if you think of a poultry farm owner, a cattle owner, how can he value the inventory? So obviously the standard will put a border that this standard does not apply to producer's inventory with respect to measurement, something like that. So this is the second area you will always find in an accounting standard. The third area will be nothing but with respect to definition. The terms the standard talks about. Like today if I am talking about Ind AS 16, that is property, plant, equipment. So what do you mean by property, plant and equipment? What are they? If I talk about inventory, what do you mean by inventory? Ind AS 40, if I say investment property, so what do you mean by investment? So particular definition in a technical sense will be given to us. So the third area you will always find in any standard will be a definition. Once it is defined, they will talk about recognition. Followed by measurement and the last disclosures. Now see, recognition. You may be fulfilling the definition criteria, but which are the items to be recognized? Recognized means what? It finds a place either in your income statement or your balance sheet. That is nothing but your recognition. So where it should be recognized as an expense or as an asset, as a liability in a way of provision. So that is recognition. Now the moment you say as per this standard, this thing should be recognized. Like say for example, if I am talking about provision, I should recognize the provision very much well. If I have to recognize the provision, at what amount should I recognize the provision? So next part the standard will talk about measurement. So when we talk about say for example inventories, so you see yes, inventory should be recognized. So what are inventories? Everything would be given. It should be recognized. Then the question arises, at what value should you recognize the inventory? So you will say sir, first in first out, weighted average method, this is the way I will recognize that inventory. And the last, disclosure. So whenever you are reading any standard, of course today we are going in a comprehensive revision batch, so we will not go with each and every paragraph. But if you look at the bare standard, you can obviously break that standard in these 6 parts. Generally these 6 parts you will get overall idea how the standard is talking with respect to recognition principles, measurement principles, disclosures and presentation. So we can find out that many standards would be disclosure standards only. They only talk about disclosures. Some of the standards obviously will be talking with respect to each and every item. Yeah. So let's start with Ind AS 16. We'll first go with Ind AS 16, that is our property, plant, equipment. Basically, for new syllabus, but even the old syllabus, what we say AS10, it's similar to our Ind AS 16. 100% similar there. So you need not worry, even if you are for an old syllabus, it resembles to your AS10. Of course, AS10 resembles to AS16, Ind AS 16. The first thing which I will discuss with you, scope, the definition, recognition criteria, initial measurement, subsequent expenditure, major inspection cost, subsequent cost, it is measurement, yeah. So these are the areas I am going to discuss with you today. Based on that, we will be going with the examples for each of the idea. Now, no, the scope. Have you written that? Where this standard does not apply. So it clearly says PPE covered by Ind AS 105. Now property, plant, equipment which is covered by Ind AS 105, that is nothing but non-current asset held for sale and discontinued operation, that is 105. So any property, plant, equipment which is covered by Ind AS 105 will not be covered by the principles of Ind AS 16. Yeah. The second area, biological assets relating to agriculture activity. Of course, basically that is Ind AS 41. Now what do you mean by biological asset? Nothing but living plants and animals. So the standard, when I say biological asset, we have two: living plants and animals, of course living animals. But it applies to bearer plants, very much important. Now what do you mean by bearer plants? So the second area of our scope says that it does not apply to biological asset, living plants and animals. Of course, which are relating to agriculture activity. But it applies to bearer plant, it covers bearer plant. Now what is bearer plant? Standard gives a definition. Bearer plants are those plants which are held for the purpose of use in production. Second, they are going to bear a produce. Third, there is a very remote likeliness of being sold rather than scrap sale. I'll give you an example to understand it in a better way. Like cherry on a coffee plant, the cotton bud on a cotton shrub, coconut on a coconut tree. A bearer plant is a plant which bears a produce, and there is no chance of it being sold as an agriculture produce. It is not an agriculture produce. Like yearly we have cultivation, maize, bajra or something like that. What happens is the same thing is sold as an agriculture produce. Here the bearer plant means what? It is not going to be sold as an agriculture produce. Very remote likeliness of being sold as a scrap. Like at the end of the economic life of that bearer plant, what is going to happen? Can I say at the end of the economic life of that bearer plant, we'll say, sir, it is already dried up. Now let's sell it off. So the moment you say let's sell it off, that is okay. That doesn't mean it comes under the definition of agriculture produce. So first of all, I can say a bearer plant I write down the scope again. Yeah, but it covers bearer plant. So what is a bearer plant? Bearer plant is a plant which will bear a produce, like mango trees in a mango orchard. So it bears a produce on it, cherry, or the leaves in a tea garden of the tea shrubs. The whole shrub is not an agriculture produce. Only the two leaves which blossomed up on the top are the produce which we are going to use it for the purpose of production. Yeah. So which will bear a produce, will be useful for a period of more than 12 months, and third, remote possibility of being sold as an agriculture produce. Now, why did I use the word remote possibility? What do you mean by remote possibility? Like at the end, when the bearer plant dries up, or when the economic life of the bearer plant is over, don't you think at that point of time it will be sold as scrap sale? So this bearer plant is obviously covered. Now we were on biological asset. I'll also write down the third. Mineral rights. Mineral rights, mineral resource, and similar non-regenerative asset. You are holding some mines, a quarry, a oil well, crude oil well. So what is that? That is nothing but I am having some kind of mineral resource or some kind of similar non-regenerative, means whatever is, it is. It is non-regenerative assets. These are also not governed by our Ind AS 16. So basically 3 areas which are not governed by Ind AS 16. Of course, I can add 2 more areas, 3 more areas, like those PPE which are covered by leases, those PPE which will be governed by government grants, that is okay, or business combination PPE. We are not talking with respect to that, because the recognition and measurement principles for that particular item of PPE will be governed by that standard. So whatever PPE is governed by whichever standard obviously is outside the ambit of Ind AS 16. Clear till here? The scope part. Now we come upon the definition. What do you mean by PPE? So property, plant, equipment are tangible items, or I can say tangible assets, See, very much important. The standard has just removed something which is intangible. Only tangible items will be covered. Are tangible assets. What are these assets for? Can I say it is held for use in production or supply of goods and services? For rental to others or for administrative basis. Second, expected to be used during more than one period, and the third, not held for sale in normal course of business. Now see, the three things for a item of PPE. First we said that they are held for use. They are held for use. Now, intention to use and held for use may differ. I will talk on that later, because there are some assets which may not be used every time, but they have to be held, like safety assets. You have fire extinguishers. The whole fire extinguisher system is there in our malls and all those things. So they are not held for use, but they are very much required. That we'll talk when we come upon measurement principles and recognition principle. Held for use in production or supply of goods and services means that it's taking care of everything, for service sector, for production sector, everything. Machine, plant, roads, everything will become. For rental to others. Now this is the area which will be linked with our Ind AS 40 also, because there we have investment properties. So there we will link that if investment properties are some properties which are held for giving it on rental basis or capital appreciation, तो इधर कौन सा property का बात चल रहा है? Because in Ind AS 40 also you talk about there are some properties which are held to earn some income by way of rentals. So here also you say rental. So when I come on Ind AS 40, at that point of time I will link you that which rental is this Ind AS 16 talking about and which rental is Ind AS 40 is talking about. Rental to others or for administrative basis means the whole scope has been taken care of. Expected to be used during more than one period. See, it's not 1 year. Try to understand the language here. Expected to be used for more than one period. So it all depends. What is your period of reporting? Generally, the reporting period is always 12 months. But if you are reporting for a period which is less than 12 months for your internal purposes, then it may happen that I have an PPE which is going to work with me for a period of 7 months. So in 3 months period is this 3 months period, next is 4 months period. So can I say it is going to be used for a more than one period? Provided I have broken off my reporting periods, then this will happen. Generally we say it is always 12 months, but the standard is not given word 12 months, expected to be used during more than one period. Generally one period is 12 months, but if a period is less than 12 months and that PPE is going to be used in both this period, then that is a PPE. Third, not held for sale in normal course of business. Of course, if it is held for sale in normal course of business, that is nothing but our item of inventory. Yes, ma'am. Would like to ask something? Now, coming on to, if you remember the 9 points what we had written in the beginning: scope done, definition done, recognition criteria. When should you recognize an item of property, plant, equipment in your financial statements? the third area, recognition criteria. Now, the standard has given 2 points, that there may be some items of PPE which obviously come under the ambit of definition. That you will say, sir, this asset is a property, plant, equipment, but it is to be recognized in our financial statements only and only if it fulfills the recognition criteria. The first, it is probable that future economic benefits will be flowing to the enterprise from that property, plant, equipment, and second, the cost can be measured reliably. Just write it down, both of them. It is probable, that is more likely than not, that future economic benefits associated with the asset will flow to the entity the cost of the item can be measured reliably. Now, should we discuss this point? Now look here. It is probable. Probable means more likely than not. Means it's going to happen. It's probable that future economic benefits associated with that asset will flow to the enterprise. Some economic benefits should come to me. So any kind of asset held or PP for just an hobby will not come and satisfy our recognition criteria. Like you have vintage car. It does not give you any economic benefits, then it is not to be recognized only as per our Ind AS 16. You may hold it. It satisfies definition whatever criteria it may be. But recognition criteria is not getting satisfied if it does not give me future economic benefits. Like spare parts, machine spare parts. Does it give me economic benefit? The spares, what we use for day-to-day activities in case of factories. Do they give us economic benefit? You will say yes, but the benefit gets restricted in 1 year. Then we say it is item of inventory. Because if you look properly, just the definition says going to be held for a period more than 1 period. So what happens in case of spare parts, machine, we say it is used within 12 months. Then we say it's over. It does not come here. So there is no future economic benefit. Same way, safety assets. Now what do you mean by safety asset? Safety environmental asset. Like I have a fire extinguisher here. The whole fire extinguisher system has been installed by me. Now tell me, is it an item of property, plant, equipment? You will say, sir, does it give economic benefits? Do you think so? It gives economic benefit? The answer is no. See, from the first sight you will say, no sir, only if there is a fire they will come. But that is not my business. I am just installing safety equipments. Like in many industry, chemical industry especially, you need to install some treatment plant of those chemicals. Then only the waste can be thrown out after some proper treatment has been done. Now if you look from a first side, you will find, sir, they are not giving us economic benefits. It's very much true. They do not give us economic benefits. But the standard looks at that other way. Because it is because of those type of asset, the other asset are in a capacity to give you benefits. Like if I don't have fire extinguisher, I have not installed a pollutant system which just clears off all my wastage and then throws that water, polluted water in something. If I don't install this system, I'm not able to use the underlying asset. Like if I want to use this building, as per Mumbai Municipal Corporation rules, what I have to do? I need to have fire extinguishers installed on every floors. This system is compulsory for me. So can I say for smooth use of my building, I need to have this fire equipments? Means this equipment themselves are not giving you economic benefits, but they are helping me derive economic benefits from the assets to which they are attached. वो खुद बेनिफिट नहीं दे रहा, बट अगर वो नहीं है तो आई एम नॉट एबल टू डिराइव द इकोनॉमिक बेनिफिट्स फ्रॉम माय बिल्डिंग. It helps me derive economic benefits from that building. That's why we say this, even though they are safety, environmental assets, still they will be classified under the head of property, plant, equipments, because the benefit, future economic benefit is an indirect way, not direct way. Means I'm just trying to tell you the scope of this standard does not get restricted. It comes with many things. That's why administrative purpose. Now, this is our third area, recognition criteria. Only if you fulfill recognition criteria, then only that item will be shown as property, plant, equipment. Coming on to initial measurement. I will break this initial measurement in basically three parts, like PPE acquired through cash, PPE through exchange, and self-construction. You can get PP in many ways. Other is leases, business combination on a consolidated basis. But we are just going to discuss these three areas. That at what amount the item of PP should be recognized initially. Initial. If you acquired an item of PPE through cash, means you are buying out an item of property, plant, equipment. So at what amount should you recognize that item of PP? Initial recognition, measurement I can say. So can I say if it is cash, it should be nothing but purchase cost. Add up directly attributable expenses. I'll talk on all these things. Taxes and duties, of which no refund or credit shall be claimed. Of course, from that I will deduct any kind of trade discounts or rebates, and the most important, present value of cost of dismantling, or you can say decommissioning. Basically for this we have Ind AS 37. First, let me talk what is covered, what is not covered. Purchase cost. Like you bought a machinery. So what will be the cost of machinery? We are talking about initial measurement, measuring an item initially for the first time. First time when an item of PPE is getting recognized in our books, at what value should that amount be recognized? What should be the components of it? What should be included? What should not be included? This is what we are talking about. Within initial measurement, we have broken it into three parts. The first part, if the PPE is acquired through cash. Second, we say it is through exchange. Third, we say it is self-constructed. We are constructing our own PPE. See, there are many of them, but the standard does not deal with them. Like PPE acquired in an amalgamation or a business combination, PPE acquired through leases, that will be taken care by those standards. Ind AS 103 will talk about business combinations and all those things. So when we go for those standards, we will be dealing with again PPE, but how to recognize that PPE. Here we are only with respect to if it is acquired on cash basis. So if it PP is acquired on cash basis, what is to be included? The first thing, purchase cost, the price at which we bought, plus directly attributable expenses. See, the moment I use the word directly attributable, please remember that only those expenses which are necessary to bring that item of PPE in working condition. Very much necessary. Like training to an employee is not necessary to bring the item of PPE in working condition. How to use this particular tablet? For this somebody trains me. That is not necessary for using this tablet. I hope you are understanding. See, tablet is ready to use. Is it that way, sir? If training is given to you, then only it will be starting use? No, it is ready to use. Same way, relocation cost. They are not directly attributable. You say, sir, I am shifting my asset from here to another branch in Borivali. Is it necessary? Relocation cost, not at all necessary. For the item of PPE to be ready for use. The item of PPE should be ready for use. When I use the word directly attributable means without this expense, this item of PPE will not be ready for use. Like site preparation cost. If I am installing a machine, site preparation cost. Delivery charges of the item of PPE. Very much necessary. Some professional advisor who is required to install it. Installation charges. They are all necessary. In many cases, even purchase commission. There are some items of PPE which I cannot buy on my own. So there are some persons who help me purchase it. So I have to incur purchase commission. Same way, transit insurance. Very much compulsory. Without transit insurance, they don't deliver it. So then it will be included. So when I use the word directly attributable means this could not be avoided only. This is going to happen. They are unavoidable cost, I can say. Directly attributable expenses. Of course, this third point, very simple to understand, taxes and duties of which no refund or credit you are going to claim. Means if you have paid GST, if you are not going to claim any credit, then it will be forming part of my cost. If import duties, you are not going to take any duty drawback, then it is going to form part of your cost. Yeah. Of course, as reduced by any kind of trade discount or rebates which you get. The fifth point, present value of cost of dismantling or decommissioning. Now, what do you mean by this? Present value of cost of dismantling and decommissioning. It is nothing but you have an obligation today because you brought that item of PPE. Let me explain you a basic example and then we go for a higher example. Like you give me this room on rental basis. Say for example for 2 years, I take it. It's an operating lease, but I'm just giving you an idea to understand it. You give me this room for rental basis for 2 years. I say I want to do some modification. I don't want this room to be this way. I just want a partition in between, which I will make on my own. Yeah. So I will bring that POP sheets and make some partition, which will be for my own purpose. But you are telling me that, okay, sir, you make a partition. We are allowing you to make a partition of this room for your personal use and all these things. But there is a term and condition attached to this, that when you go out of this premises or when you give back us this premises, ये partition उकड़ के लेके जाने का खर्चा तुमको करना पड़ेगा. You have to dismantle this partition and then only you have to give us. Means, can I say, the moment we enter into an agreement, there was an obligation on me to do something afterwards. आज ही मेरे को मालूम है, after 2 years, I have to incur some cost. What is the cost? Sir, you have to dismantle the partition. Is it known now? You say, yes sir, it is known now today because I entered into a contract with you. Now just, this was an example, it's an operating lease where asset is not there. I am making some machinery which is going to produce some hazardous chemicals, some nuclear waste. So of course there is a life to that particular asset. Okay, I'm going to use uranium and this, and I'm going to make some power generation from it. But after 20 years, these assets have to be abandoned and have to be disposed of. Now government regulation is there. Government says, sir, you cannot abandon it. Chod ke bhago. No, not allowed. You cannot abandon it and come away. What you have to do is, you have to see to it that it is decommissioned properly, it is dismantled properly, because it is nuclear. There can be radiation, people will die. So we want this nuclear facility to be taken care of. Means now this obligation is there on me, yes or no? मैं जब आज machinery बनाया, plant बनाया, do I have an obligation? Yes, 100% I have an obligation today. Today itself I have an obligation that after 20 years or 30 years, I have to see to it that this stuff is getting dismantled or decommissioned appropriately, or something is restored back where it was. Restoration. Like government gives me a contract to exploit natural resources. Now what happens when I start exploiting natural resources? The periphery area obviously gets affected. Like I am extracting coal, so everywhere you will find coal particles getting settled and the vegetation is lost. Government has given me a contract for that. It says for 60 years you extract, but after 60 years government wants me to restore it back to the normal. Restore means वापस coal डाल नहीं देने का. Bring back the vegetation where it was. So this obligation is there on me today. I have to estimate what would be the outflow to settle such obligation, and this is nothing but the cost of buying this asset or cost of acquiring this asset. Don't you think without this you cannot have the economic benefits of the asset? Can I tell to the government, no sir, I will not do any kind of dismantling of the nuclear plant or something like that, hazardous chemical making plant? I cannot. I have to compulsory. Means I have an obligation not today on myself. And if I have an obligation, what is the expected cash outflow going to be there with respect to this obligation? I say, sir, after 20 years, there will be an outflow of say 30 crores. Standard says, so 30 crore is not your cost. What is your cost? Present value of that 30 crore is your cost. Present value of that 30 crore is your cost. Now, but obvious, your brain will say, sir, so journal entry, what will be the journal entry? Like you purchase. So I purchase from him, so I'll pass an entry, the asset, machine account debit to bank. I paid loading charges to her. So I'll say, oh, machine account debit to bank. Then any kind of installation charges I paid to him, machine account debit to bank. What entry should you pass for this area? What entry will I pass? I will pass an entry. If it is machine, then machine account debit to provision for decommissioning cost. Machine account debit to provision for decommissioning cost. Now what amount will I write? Will I write 20 crores? Will I write 20 crores? After 30 years I have to pay 20 crores. Will I write 20 crores? No. I will write present value of that 20 crores. Now the moment we say discounting, so Ind AS 37 will talk about how to discount it. It cannot be any other rate, it's basically your weighted average rate, your cost of capital is the rate at which you will discount. So it will not be 20 crore, it will be More than 20 or less than 20? Less than 20 crore. It will be less than 20 crore. So it will be less than 20 crore. So say for example, I am just writing, I don't know what it will be. It's 15 crores. So this 15 crore will be added to the cost of the asset. Now what will happen? Can I say after 1 year, today what do I say? After 20 years I have to pay 20 crore. So what is the value of 20 crore? I say 15 crore. But the moment there will be FLX of 1 year, एक साल का बाद, what I have to say? Sir, after 19 years, I have to pay 20 crores. After 19 years, I have to pay 20 crore. So obviously, this provision is to be increased, yes or no? So if this provision is to be increased, what would be your journal entry at that point of time? The journal entry will not be machinery account debit to provision. The journal entry will be profit, or I can say finance cost. Finance cost account debit to provision for decommissioning cost. Here, at that point of time, it will not be machine account debit. It will not be machine account debit, but it will be profit and loss, or you can say finance cost account debit to provision for decommissioning cost. Yeah. Now, is this clear to all of you? Moving on to the next part. What should not be included? I'm sorry. Cost of opening a new facility. See, in exam they are asking such type of question. Advertisement or promotional expenses. Cost of conducting business. Your training cost, admin and general overhead, relocation and reorganizing. The last point they had asked one question also, like initial operating losses. Like a company opens an amusement park. So in order to attract people, what does it do? It reduces the ticket rates to 25%. Like the ticket is 500. So it does not charge you 500, it only charges 125. So should this 375, which is incurred so that the amusement park can be used properly, be added to the cost of amusement park? Answer is no, but obvious. It is not necessary, na? Not directly attributable. Okay, sir, only if you incur some losses, then only that amusement park is ready for work. No, it is always ready. So what happens sometimes, somewhere in audit, they may ask you a question, or in our accounting standards directly question may be asked that whether this cost will be included or not, something like that. Yeah. So following expense should not be included. Just give you a brief idea with respect to whatever I spoke up. You writing up? Now, we were basically on initial measurement. I'll just give you an idea of what we are discussing. We discussed what is the scope of this standard. What was the scope of this standard? Which areas? 3 areas. Biological assets, then minerals, mineral reserve, and the third was nothing but PPE, which is covered by Ind AS 105. Then we defined PPE. What was PPE? Used for production or giving it on rental or providing goods or services. And will be used for more than one period and not held for the purpose of use. Clear? That was something PPE. If definition criteria is satisfied, then we went for should this item be recognized. So there were two conditions. What were the two conditions? First, it is probable that future economic benefits will flow to the enterprise. Second, the cost can be reliably measured. In that we talked about spare parts and nothing but safety assets. Thereafter, we talked about initial measurement. You want to take pic? You can take. Huh? If you are not writing, it's okay. Huh? Just take a pic of this. Now, talking about initial measurement. Three areas we discussed: cash, under cash, purchase cost, plus direct attributable expenses, plus taxes and duties of which no refund or credit shall be claimed, minus trade discounts or rebates, plus present value of cost of decommissioning. See, when I talk about present value, it has to be compulsory. Huh? तुम ऐसा मत सोचना, I feel that after 20 years I will incur this expense. No, 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 no. You should have an obligation today only. It's not about your feeling that I feel an expense will happen. No. Do you have an obligation with respect to something to be performed after 20 years, 30 years as the case may be? Uska present value ढूंढने का. Clear? And following cost should not be included. Now I go upon the second area, that is exchange. Means what is happening? What happens in an exchange? Here what happened, this part we talked about that sir, what came in was PPE, what went out was cash. Now what comes in is PPE, what goes out is another item of asset, not PPE, not necessarily PPE. Like I take a machinery from you and I hand off my inventories or any other item of PPE or investment as the case may be. At what value should I recognize this item of PPE? I gave you my car and I took a machinery from you. At what value should I recognize machinery? See, think from my angle first. मैंने तुमको कार दिया या तो I gave you my investment in some equity shares or I gave you my inventories only. But what I got was machine. So incoming is PPE, outgoing is any item of asset. So we are now focusing not what is going out, we are focusing on what is coming in. That what is coming in should be recognized at what value. Yeah. So PP acquired through exchange of an asset. Now what does Ind AS 16 talk on this? It says the PPE should be measured at fair value. PPE should be measured at fair value unless the exchange transaction lacks commercial substance. I repeat once again, very much important. The PPE should be measured at fair value unless the exchange transaction lacks commercial substance. I'll write it down. PPE should be measured at fair value unless the exchange transaction lacks commercial substance. One more area is there, but first let's talk on this. Commercial substance means what? First you understand that point and then you will be able to understand what the Ind AS talks about. If my cash flows are going to get affected because of this exchange, we say the transaction has commercial substance. But if does not, the cash flows are not going to change. They remain same. तुम जैसा पहला था वैसा ही बाद में. Then we say the exchange lacks commercial substance. So it does not affect my cash flows. Normal operating cash flows which that asset gives. You say, sir, where you are there only. Like I gave you a Maruti Wagoner, you give me some Maruti ka other gadi. It does not affect my cash flow. So it has nothing to do. It has nothing to do kiska value kitna hai. Please, first of all, come on that point whether the exchange transaction has commercial substance or not. If the exchange transaction does not have commercial substance, then fair value will not come.